Alright, good morning everybody. Thank you guys so much for tuning into today's live stream. It is August 20th, 2025. And the first thing I do want to cover here coming into this live stream is the economic calendar. So for today, we don't really have anything too insightful, or not insightful, but too exciting. We have crude oil inventories, FOMC member Waller speaking, FOMC meeting minutes, which is not FOMC, the actual one that we're used to. And it is not FOMC, yeah. But we do have, I guess that's the only thing that's really like major here, right? And I think that'll be a good transition onto the actual technicals here for today. So I do want to start off with taking a look at this daily candle here from yesterday. So on the daily time frame, this was the way that we closed here on this daily candle. With this bearish daily candle closure, you can anticipate that the next daily candle should take out the daily low. And so whenever we opened up here at 5 p.m. Central Time, we took out the daily low and completed the daily objective, right? So here's the daily objective right here. And so once we took out that candle's low, where that green line is, that means that the daily objective, the daily, I guess, that means that we have already completed the objective for the daily time frame. And so now coming into this morning and this afternoon session, because I can't utilize the daily time frame as a how would you explain this? Because I can't use the daily time frame as a bias. I can't base any trades off of the daily time frame just because the daily objective has already been completed. My best bet is to utilize the intraday time frames. So whenever I say intraday, I am talking about, the 4-hour time frame. I'm talking about the 6-hour time frame. I'm talking about the 8-hour time frame. So depending on how those candles close will give me a morning objective. And so here we can see that we do close here on this 4-hour candle and this 8-hour candle within about 18 minutes or so. So until then, I'm just going to be sitting on the sidelines, just waiting patiently, just to watch how we do end up closing here on the 4-hour candle and 8-hour candle. And I think one thing that I do want to mention is that based off of this daily dealing range here, we did end up retracing back into the not premium, but we did end up retracing back into the discount of this dealing range. And discount is anything that is below equilibrium. And so from this swing low here to the swing high, there is that dealing range. And anything that's in that green box would be considered the discount. And notice here, prices has retraced back into the discount of the dealing range. Let's see if we can retrace back into this dealing range right there. So that would be something that I would want to watch for right there. So that's a possibility here as well. this is a possibility right here that prices could retrace back into the equilibrium of this dealing range, right? So that's something that you do want to pay attention to. And yeah, very interesting, right? Like I said, the daily objective has already been completed, so there's nothing really much else for me to kind of force. Pretty, simple approach to what we are going to do here for today. Let's take a look at what's going on here for ES and NQ. Yes. And NQ, we do have a SMT divergence here, as you can notice. On NQ, we have taken out this blue line, and the same blue line on NQ is right here on ES. So notice here how ES, we did not take out this blue line yet, right? So that means that there is a SMT divergence. There is some sort of manipulation here right now. And with SMT, if there is SMT, then you kind of have to anticipate that we could have a potential reversal, right? We could end up reversing to the upside, but it kind of depends on yeah? Okay. But yeah, like I said, there's that. The fact that there is SMT right now between NQ and ES means that there is a possibility that we could end up reversing to the upside. So we'll see here. We did end up retracing back into the discount of this dealing range here as well. So there we go. Prices is within that green box right now. So the fact that prices is right here within the green box means that the possibility of us it's makes sense here, right? Because we did end up retracing back into discount. Bye bye. Okay. About 15 minutes left here till the 4-hour candle closure and the 8-hour candle closure. I just have to remind myself that there is a SMT divergence, a pretty large one here as well, so just got to keep that in mind. I do want to mention that there is SMT divergence right now. Trading below the monthly open. Very interesting. just wait, be patient, and just watch how we do end up closing here on this 4-hour candle and this 8-hour candle. I think before we do so, within this next like 5-10 minutes, I'm going to a chess game just to kind of warm up my brain and see how it's processing. He's up 1 pawn. I think this is a good position to have my horse. Oh my gosh, wow. I thought I had it, but I thought he choked. I choked. I'm going against a Viet guy. I go here. See if I could castle. Probably gonna look for a castle here. About 6 minutes left. I don't know if he wants to trade here. I wouldn't assume so. Viet Pro 9 looks like he might lose here. That's a pretty good game. Two minutes left to the candle closure. It's looking like we're gonna have a pretty bearish closure here, to be honest, on the 4-hour time frame and the 8-hour time frame. With that in mind, we can make the assumption that we should take out the 4-hour low and the 8-hour low. Right. Looking based off of this 4-hour candle and this 8-hour candle, you can make the assumption that, hey, we should take the 4-hour low and the 8-hour low. Couple more seconds left, about like 40 seconds. So looking pretty bearish. Closing period pretty bearish. So yeah, like I said, this morning objective, what I'm expecting is that we should at least take out this blue line. That's my morning objective. 15 seconds. So let's see if this blue line here gets completed before we open up, or like before we end the stream. All right. I think this is a good transition here as well onto my trading journal, just so that I can review some of the pros and cons with you guys and just touch up on some of the things that I need to touch up on. Alright, so things that I should continue to do coming into this week. Some pros are continue to take consistent trades. Every single setup that I take, I must have a higher time frame objective, a model, and an entry pattern. Those are the three things that I look for, right? Higher time frame objective is essentially what's the bigger reason for why I want to see prices continue in a specific direction. My model, how am I going to align myself with that, right? If my higher time frame objective is based off of the daily time frame, then my model is going to be on a time frame lower relative to that, and I will kind of structure the setup based on the fact that my model is used to kind of allow me a position within that higher time frame order flow. Entry pattern is the reason why I should be entering into the trade to begin with, right? Entry pattern could be a fair value gap, order block, breaker block, mitigation block, whatever concept entry pattern that ICT has introduced to us. You can use my entry pattern of choice is a fair value gap, just because it's a lot easier to understand and see what is a fair value gap and what is not. I want to pay close attention to SMT. So like the fact that I've been, marking out where ES's lows is and where ES's highs are, and seeing the relationship between, NQ and ES, it shows a lot of it shows where there's been possible manipulations, right? But that is just something that you do want to keep in mind is SMT. If there is SMT, then you have to be acceptance of the fact that we could reverse. And if there is no SMT, if there's a lack of SMT, then there's a possibility of a potential continuation. Third, understanding the strategy. There's two things, or I guess I won't say two things, but there are two models that I have. There's an expansion model and a equilibrium model. Expansion model is whenever my higher time frame objective and my model, they have two different draws of liquidity, it's better to show you guys through an example, but just keep in mind that there are two models, and yeah, utilize every single time frame. Like coming into today, I began with the weekly time frame, and I slowly transitioned onto the 4-hour time frame, 6-hour time frame, and the 8-hour time frame. Utilizing every single time frame's objective is crucial in the way that I'll read prices. Something I do here as well is, or I guess something that I should continue to do, is be patient. Don't force things to happen. I know it's been a while since I've even pressed the button, but that doesn't change the fact that I should be continuing to maintain that level of patience, right? I don't want to force anything to happen. And yeah. Alright, and to sum things up, improvements here. Take consistent setups. 3 things that I look for. Like I stated before, higher time frame objective, model, entry pattern. You want to watch closely between the relationship of NTU and ES, as that's a good indicator of a possibility of a reversal of Beery Allen. Not, I'd say Beery, what? Be proactive. Be present for any opportunities and seize the moment. The 4th thing here, after being proactive, is pay close attention to the entry pattern. Entry pattern, like I stated before, is my fair value gap. And there are 2 questions that I tend to ask myself whenever I am in a trade is prices respecting the consequent encroachment of the fair value gap, and should the fair value gap even be treated as a entry pattern? Sometimes fair value gaps are going to be treated as a breakaway gap, meaning prices shouldn't even retrace back into there. And sometimes it could be. Last but not least is track the 10K journey. I'm going to record every single setup that I take and try to record every single setup. That's gonna wrap it up for the pros and cons. Here you can see that we did end up completing the morning objective, right? Like I stated before, this low here is the 4-hour low and the 8-hour low. Notice I I can only make this assumption because of the way that we closed here on this 4-hour candle and this 8-hour candle. It closed bearish. With the way that we closed here on the 4-hour candle and the 8-hour candle, it's an easy assumption to me that we should at least take out the 4-hour low and the 8-hour low. And yeah, so with that, that's gonna wrap it up for today's live stream. Hopefully, I was able to give you